This episode is brought to you by Absolute Landscapes. Absolute Landscapes is a landscape maintenance company that focuses heavily on commercial property maintenance. Call today for information about the services we provide and how we can best help you. 803-427-5944.
But yeah, man. So if you want to introduce yourself and kind of say, a little bit about what you do and a little background, kind of preface the conversation, and then
Sure.
we can go from there.
Yeah. So my name is Sara Fins. I'm a finance coach and I help solopreneurs learn to manage their business finances so that they can save time, stress less, and keep more of the money that they earn. So I've been a corporate CPA. I've also been a health coach running my own business. And I recently, it's been several years now, pivoted back towards finance coaching. And yeah, that's what I'm doing today.
Perfect. So when you say, I know you talked about solopreneurs. What would be your ideal? Like, what would you say your ideal client would be? Like the ideal person you work with?
Yeah, the ideal person I work with is a coach, a wellness practitioner, service-based solopreneur. So somebody that has their own business. It's in their first few years of business doing coaching and the like. I love working with health coaches and wellness professionals because that used to be the space that I was working in. And so I know their businesses deeply. And so
Right.
I love that as well. But yeah, anyone who's a solopreneur and just starting out in the first, few years of their business is someone that I really love to work with.
Okay. So if you had to, I'm really curious about this, man. Like that sort of time for that first couple of years in business, what do you say is like a really common problem with these people, financially?
Yeah. So one of the things I see is that they don't make managing their finances a priority. So they're working really hard to kind of get their business up and running, which absolutely makes sense, right? Maybe they're not making as much money, or any money at all, or very little money at the start because they're getting up and going. So they think, oh, I'll put that off until, I'm making some more money and I have to think about
Yeah.
it. But the bottom line is you really want to start thinking about it right away as soon as you start working on your business. And so that's one of the things that I see is that they don't pay attention to it necessarily until it's kind of like, I have to file taxes. Now what do I do? So
Yeah. It doesn't seem like a big problem, man, until it becomes a big problem.
yeah, exactly.
But I mean, it makes sense though that like the finances would be, if not number one, like up there near number one as far as like what you should be concerned about. Um, I mean, I remember like I don't know if finance is something that anyone ever has fully figured out, but I remember like in the early days of starting my business, man, I had to have another job. Like I had to have second, a primary source of income and basically work on the business as a secondary thing because there was just no way. I mean, there was just no way to support yourself,
Yeah.
those first 5 years or whatever it was.
Yeah, and I think that's really common. And it's good that you brought up that point because I think often a lot of solopreneurs feel bad if that's the situation that they're in, but it's perfectly normal for it to take a few years to get your business up and running to a place where it can support you full time. And many of the coaches I work with as well, too, they decide they want to keep their day job, and that they work their business on the side, and that's okay too. I think you have to design the kind of work that works for you and your lifestyle and whatever's going on in your life. But yeah, I think it's perfectly fine. And one of the important things to do is to keep that all separate. So from a financial perspective, if you have your business on the side and then you have your other income, keeping that business income and those business finances separate from a tracking monitoring perspective will make things a lot easier for you as you grow and decide what you want to do there.
Yeah. I think unfortunately, man, like we just have this unreal expectation because like social media and stuff like this, it glamorizes like entrepreneurship and it seems like it's an overnight thing, and if you like start something, it's supposed to be immediately successful. And if it's not, you feel like you're doing something wrong. I mean, I think social media is a great tool, but that's like one of the downsides of it is it, nobody sees the 10 plus years before that. They just see the overnight success, and that's in quotation marks, and we just feel like we're doing something wrong. But, yeah, I don't know. There's some percentage of entrepreneurs, I think this been like, it's like a very high percentage that's been like bankrupt at some point. Like I'm talking about like millionaire entrepreneurs. It's some crazy high percentage that's been this experienced bankruptcy before. And I'm wondering if that's because just as such the big learning curve that it is to start, to do that kind of thing. I don't know.
Yeah.
I mean, I'm just kind of thinking out loud. I'm just kind of curious on that.
Yeah, I think it depends on a lot of factors, right? And you're absolutely right that on social media we see everybody's highlight reel, right? And
Hmm.
businesses, especially businesses that are, I think their clients are other businesses, they
Right.
might, uh, make it look a little more glamorous than it is because they want to come off, having all of this success. But you're right, is that most entrepreneurs, it's a struggle at first and it takes them a while to build things up. And you don't see all of that back work that's done over the years to get them to where they are. And I think in terms of someone who winds up having to, think about bankruptcy or has to go through that, is it could be a lot of things. It could be that they're overspending,
Mm.
in a big way, right? Because they want to put up the appearances or because they think that they need to invest in certain things for their business sooner than their business is actually ready for it. It can be that. And it can be a situation where they just bite off more than they can chew, financially, and then the revenue is not, or the profit is not, enough to support the business. So one of the things that I talk about is the difference between revenue and profit. And so, revenue is all the money that you earn in your business, but profit is all the money that's left over after pay your expenses, pay yourself, and all of
Right.
that as well. And so it's important to not only look at the revenue, you could be generating tons and tons of revenue, but if you're spending not in proportion, and you wind up, having really low profits, that could be something that could get you into trouble in the long run too. So it's important to look at profit as well as just the money that you're bringing in.
Yeah. Well, I mean, it sounds so simple when we say you have to have more money coming in than there is going out. But then so many people still experience bankruptcy, so there's got to be something, going on. I always use, and I know this is an extreme example, but I always use somebody like Elon Musk, who's put like hundreds of millions of dollars on the line for something that he thought was gonna, fail. And I think somebody in his situation had hit whatever business he was trying to start with that $100 million. I think it was the SpaceX. Had that failed, he probably would have went into bankruptcy. And
Yes.
I mean, you could say that he was being irresponsible with his finances. I guess that's the way to look at it. But also too, like his mindset was like so extreme that he was like trying to grow, I
Right.
guess maybe too quickly or to such a degree, I mean, if a lot of people had $100 million, they would just kind of like call it a day, I mean,
Right.
they just, they wouldn't be trying to do anything else. But I'm not saying that, an extreme growth mindset is the cause of most bankruptcies, but I think in his situation, but also too, man, with something that I've seen with entrepreneurs, it's like that's part of it, like being on that. I don't want to say on the edge because that sounds irresponsible, but just like it, it's almost like the people I talk to and the people I meet, it's like they would be bored with like the
Right.
traditional, you know. I mean, that sounds like a
Yeah.
bad way to. It sounds like a bad way to put it, but I don't know how else to say it.
I get it. I think it takes a certain kind of person to be an entrepreneur, right? Because you
Yeah.
have to be willing to try new things. You have to be willing to go outside your comfort zone. You have to be willing to learn things you don't know. And I think that not everybody wants to do that. And so I think you're right in that it takes a certain kind of person. And then,
Hmm.
within that, there's also a spectrum, right? There's like the Elon Musks of the world that are willing to take crazy risks. And then there are others who are a little more conservative and want to be their own boss, have the flexibility, but do it in a more, I don't know, like a less dramatic kind of way,
Right.
I
Yeah.
think.
Yeah, I agree with that. I want to back up just for a second though, before we get too far away from this about the social media thing. There's a lot of businesses who are living like pay like basically paycheck to paycheck, whether it's week to week or month to month. And we saw
Right.
that with COVID. How many businesses shut down during COVID when there was like very little. I mean, the ones who shut down because of no cash flow, that's kind of obvious. But the ones who still had cash flow and they still shut down, I mean, that just shows you,
Mm-hmm.
I don't want to say it's a false perception, but I think we need to be realistic if somebody is trying to enter into that space. It's first of all, this is not going to be an overnight thing, and you're not going to
Mm-hmm.
be like. It's very easy for people to um, influence your perception on social media.
Yeah.
I mean, it's just like, anyways, I wanted to point that out before we move too far away from that because it's like there was a lot of businesses who lost, during, who unfortunately shut down during COVID, and like we see the reality of it. Then, like just because you like, it's crazy. I think people assume that just because someone is an entrepreneur or solopreneur, or they have a business or they're self-employed or whatever, they just assume that this person's finances are in order and that they have the money to work with. And that's probably hardly ever the case, I mean, because there's people
Yeah,
like you who work with these people, and like, if everybody had their finances in order, like there would be no need for that kind
right.
of,
They wouldn't need me.
professional,
Yeah,
Yeah. So that, I mean,
absolutely.
I just think it's
Yeah, and
important, man, to
I
have
mean,
these
like we were
realistic
saying before, it's something
expectations
that
because,
people don't prioritize.
right, right. Yeah. 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 You still there?
Yeah, I'm here. Go ahead.
Okay. Okay. I thought I lost you for a second. Yeah. Yeah. So I just wanted to say that before we move too far away from that. Um, so these people that you work with that kind of have these problems, I mean, how do you bring this to their awareness? Like, hey, I guess maybe they come to you. If they come to you, they probably know there's an issue, I would imagine.
Yeah, so the people that I work with usually are aware that they have to put more effort into managing their finances. So maybe they're not doing it at all. They know they need to be, but they don't really know where to start.
Mm.
Or they're using a system of some sort, like an accounting system or something, and it's not meeting their needs. They're not sure how to get out of it, the information that they need. I've had a lot of clients in that situation where they're using something else and it's just too much for their business, right? They don't need
Right.
that at that point in time. And so the clients will usually come to me knowing that they want to focus more, but they also don't want to spend tons of time on it. And so
Mm-hmm.
what I do is provide them with what they need to know, the basics of it, a simple way to do it so that they can feel confident and kind of, get rid of that overwhelm and have a plan to move forward. So yeah. So it's people
Okay.
that know that they want to start getting more organized in that area, but they're just not sure how to do it.
Right. And I guess the plan would vary tremendously depending on the person and the situation. And, like it's
I
probably,
mean, it does, but there are a lot of consistencies. So
okay.
especially with coaches and wellness practitioners and,
Hmm.
service-based businesses that are solopreneurs. I mean, there are certain things that you need to manage, for your finances and just so that you have the information to make smart business decisions. And so I have a program that I created because there were a lot of similarities that I was finding. And so that's kind of the framework that I use. That being said, everyone's situation obviously is different. And so we take that all into consideration as well, as like what to focus on first necessarily if something might be different for your personal situation. But yeah, but there are a
Right.
lot of similarities.
So with you, I'm just curious about this. You said you were a former health and wellness coach. Is that right?
Yep.
Okay. So with your background in that, how important do you think it is for these people to like with their physical health or physical fitness level? Because I'm a very big advocate that your physical health and fitness is like a cornerstone for a lot of other things in your life. And I know that maybe that sounds unrelated, like your financial situation and your physical health, but I don't know, man. From the outside looking in, I don't think so. I think,
Yeah.
I would just think that
Yeah.
physical health is like one of the main, because I think that influences your physical health, influences things like your mental health, your emotional health. That you can see. I just feel like I can think clearer, which you might need to manage finances. I don't know. I'm just kind of thinking out loud.
Yeah, no, I think you're right. All the things that you're saying are true. And I think it's super important. And especially as, just a solopreneur or an entrepreneur in general,
Hmm.
because like you said, you need to have that mental clarity. You need to feel motivated. You need to feel inspired, right? And if your physical health is not in order, then you're not going to be feeling that way, right? And so that, it could be working out, like you said, in physical fitness, but also what you're putting in your body. And as a
Right.
health coach, that was what I was teaching mainly, eating real food, eating less processed food, making time to meal plan, making time to take care of your self care so that you have the energy and you feel good so that you can do all these things in your business. Because most of us too, like it's not just our business, right? We have business and then we have our lives as well.
Right.
So, it's combining, having the energy to be able to take care of all of those things. And I think prioritizing your physical health is going to help get you there for sure. So I
Yeah.
totally agree with that.
For sure.
Yeah.
I just don't see how that would not be at least one of the, maybe not the starting point, but at least one of the starting points, because dude, the curves and the curveballs that come with like entrepreneurship and stuff like that, like you have to be able to adapt and like, move with the market or the situation or whatever.
Yeah.
How much do you do? I guess maybe this kind of ties into everything, but maybe not. Did we talk about financial planning at one point?
We did. We
Like,
talked, yep, a little bit about financial planning. And so I think the first thing you need to do is look at where your business is at,
right.
right? So start, if you're not doing it yet, not you, but your listeners, whoever, if you're not, as a business owner, if you're not doing it yet, start by keeping track of what's going on now so you have the information you need to then plan.
Hmm.
So once you know, you can plan better for the revenue that's coming in and your expenses, then you can start looking forward and planning for the future. And maybe that means setting aside, money for investments you want to make in your business, or paying yourself. A lot of beginner business owners that I work with are not yet prioritizing giving themselves like a paycheck. And so that's another thing that you can plan for if you're not doing that already. And so it's important to look at where you are so you can look at where you're going.
Yeah.
Makes sense?
Yeah. No, I
Yeah.
got you on that. I, it's just, man, a lot of people that I know that are like in that solopreneur, early entrepreneur stage. It's just, and I get it and I understand it, but it's just about making that next, that next paycheck. Like you hit the nail on the head earlier when you said a lot of people don't even think about their version of managing finances is like, how much do I have in the bank right now?
Yes,
It's,
exactly.
and I mean that can get if it's not kept an eye on, it can get out of control, or in an area that's like easily what am I trying to say here? It can put you in an area that is like the opposite of what you're trying to do, which is like sustain
Yes.
the business. Yeah.
Yes, right, exactly. And I think, you are right though, that at the beginning you kind of have to be scrappy, right? And you have to figure
Hmm.
out what you can do when, but it also makes the sense to think through the the expenditures that you're making. And so I'll give an example. When I first started this business now, I was health coaching, but I knew I wanted to create this program, and I knew there were all these systems out there to do it and make it look pretty and, build the technology. But I ran it first with simple videos, in Dropbox and an Excel spreadsheet,
Hmm.
because I wanted to make sure that it was viable before I went and invested in a program. And so I did that for the first couple times I ran it. And then I said, okay, people are interested in this. They're willing to buy it. Now I feel confident making the investment in that program so I can, make it look a lot more professional. And that's what I did. And then, using that going forward. But you have to kind of stop and think where you're at, and is there another way to do it before I go and put all this money into something. And sometimes sometimes you just need to invest that money, but you have to, I like to just make sure, to advise business owners to do that gut check and to really think it through, rather
Hmm.
than just buying the next shiny thing, because there are so many shiny things out there that
Yeah.
are positioned to help us with our business, but they may or may not be actually as helpful right now. So
Right. And so how would you recommend a person do that, as far as like, I guess maybe analyze
Mhm.
whether the business is worth, I don't want to say worth getting into, but like, like, I don't know how much you know about real estate, but like with real estate, when they price a house, there's like a comparative market analysis. I think it's what it's called, a CMA. And so they're like, look at other houses in the area and say, oh, well, based on that, mine should be worth this much. And then,
Right.
somehow form a price from that. So is there like, so what are you saying? Are you saying like, well, I don't want to insinuate when you say
Yeah.
like, and how did you say it?
Yeah. So I think brick and mortar businesses are different, and I can't speak
Okay.
to those as much. But so for coaches, or for any type of service-based business where you have an idea, you want to try a product or you want to try an offering, I recommend testing it first,
Okay.
because you can test it usually in this industry anyways with little or no cost, right? And
Hmm.
so, and then do some market research. You could do a series of interviews, with people. Say you're, in a Facebook group where there's other business owners, put it out there, meet with people, ask them some questions, see if it's something that, people are willing to pay for. Right.
Right.
And then test it out before you put all this money into it, in order to know whether or not people, maybe they don't want it, so
Yeah.
before you invest all that money. So that's my suggestion, especially in this industry. Again, I can't speak to all industries,
Right.
but for coaching and for that sort of offerings, that's my recommendation.
Yeah. Well, I think some businesses, man, it's just like the market is just so saturated. It's just like there's so many of them. And if
Yeah,
you're
you
going
have
to
to,
do it and be successful, you really have to make yourself like stand out and be different, you know?
exactly. You have to find a way to set yourself apart for sure.
And that's like
Yeah.
a, man, that's a whole different thing to learn in
Mhm.
itself, you know? But
It's
I
an
mean,
evolution.
yeah, I mean, I guess if it's something you're passionate about, if it's something you really want to do, you know, it can happen. This makes me think of a quote. There's a quote that I love this quote. I think it was maybe Gary Vaynerchuk or either Simon, what is it? Simon Sinek.
Cynic. Yeah.
One of those two said this, which is if you chase money, that's usually the best way not to get it. And so
Yes.
like you see all these people who are like trying to do a thing specifically for the goal of making money. And yes, it has to make money, it has the profit and that kind of thing. But I feel like if the passion is out of it or the purpose is out of it, you know, there's somebody that's going to come along that has that passion or has that purpose, and that's going to, you know, flood into the business, and it's going to reflect because of that.
Yeah,
And
and
so,
that's what's going to keep you going too.
right,
That, that passion behind your business is what's going to keep you going on the days that
for
are
sure.
hard or the
Hmm.
times where you're not feeling inspired and you don't want to do that, call, or you don't want to do that email or whatever it happens to be. That's what's going to keep you going, I think.
Yeah, oh, for sure. Because when you're, especially like in the early stages, you don't really know every single expense yet, and something happens you don't anticipate, and it's like, man, if the purpose that you're there is to make money, the first time something
Hmm.
like that happens, you're going to be like, man, I need to find something else to do. But if you have
Yeah.
the passion there, and the passion pushes you, and the purpose of, you know, whatever it is pushes you, and that's why you're pursuing it, it's a whole different thing. You know,
Yeah.
you can kind of roll with the punches a little bit better. Um, but I think though, you know, I think one thing about the market we have, and this is, I think, generally for most businesses, is the market will, uh, for the most part, reward those who tend to work the hardest, you know, at the whatever it is they're doing.
Yeah.
Um,
And also consistency.
right. Oh yeah.
I think
Yeah.
consistency and it might take you 10 years or it might
Hmm.
take you 5 years. But if you're consistent and you're moving forward towards your goals and you're willing to evaluate along the way and see what's working, what's not working, and tweak that, as you go, I think that goes a long way in keeping, getting a business to be where you want it to be.
Yeah. And especially like with the online stuff, like any business is sort of virtual or online or like any kind of content creation, man, that consistency is like, if you have an
Mhm.
audience or you're trying to build an audience or, you know, you have clientele who's like all remote, basically, I mean, that consistency is everything, man, because like there's again there, if you're not doing it, there's somebody out there who is, and
Mhm.
they're getting that exposure. The algorithms reward that for social media. Again, one of the, I guess you could say that's a positive benefit to social media, but it's like, it's just, I don't know. To me, it feels like the online part of it is like more competitive than I think the brick and mortar stuff. You know, because the brick and mortar, I mean, unless you're like a franchise, you're like kind of, there's like you have a radius. You know, you might be in
Mhm.
a certain part of your city or a little town or whatever, but online, man, like there's so much more opportunity. But then there's a lot of people that are, you know, trying to do the same thing you are, and that's
Yeah.
just kind of like just to go off on a tangent right here. A business philosophy that I have is like, you have to work like there is a, I don't like to use the word competitor because I don't think you should compare yourself to people in your field. I think you should compare yourself to, you know, the past versions of yourself. But you have people who are doing the same thing that you're doing, and you should work as if somebody's trying to take that away from you. You know,
Mhm.
because there's a phrase that says the wolf on top of the hill is never as hungry as the wolf climbing the hill. Man, there's somebody out there, dude. If you get to a place where you're complacent and you're like comfortable with where you are, somebody's coming. Somebody's this hungry. They're coming, you know,
Yes.
and they're gonna, whatever. I don't want to get off on that rabbit hole.
Yeah. No, you're
Um,
right. You have to stay in the game.
yeah. Um, so okay, so we talked about the most common, like one of the most common problems you see is that just people just are not aware of this thing. You know, they're just not aware that finances are this big of a deal.
Mhm.
Um, what is it? Okay, so awareness is one thing, and then maybe like, I think you mentioned lack of well, I think lack of revenue is probably an obvious one, but is it just, I guess if they're not aware, they're probably spending too much, or they're not spending in the right places, or, you know, maybe they're spending money on things that aren't really as important as some other things.
Yeah,
I
they
don't know.
could be.
I'm just kind of throwing ideas out. I'm just trying to.
Yeah, so I think it's lack of information, right? Because you need information to make the decisions. And so I think that, you know, it's you have to track your numbers in order to know what's going on. And
Mm,
so that's what I see, a lot of. It's like the confusion around what do I need to track, right? Because what numbers are important to look at, especially starting out, and then making the time to do it so that you can look at the picture, because what it's doing is it's creating a picture for you of what's going on
Right.
in your business with your cash flow. And so that's important to look at that and to say, you know, am I spending too much? And do I need to increase my prices? Whatever is going on, but you won't know that until you have the data to look at. So that's why it's so important to find a tool that works for you and start tracking so that you have that information to make all those decisions.
Okay. I'm trying to see where, because I know we're limited on time. I'm trying to see where we want to go from here.
Yeah.
Okay, so like in the first situation, in the first like little bit of these businesses, is it that people their spending is probably not wise? They're spending money on things that, so in other words, let's say they start a business and then the first thing they do, they start making a little bit of money. They want to go out and buy a boat or something that's like way unnecessary to the business. Do you see that often? Because I feel like that's that's kind of a main problem with people that I talk to.
Yeah.
Not on the podcast, but just like, as soon as
Right.
we start making a little bit of money, we want to take it and maybe put it in I guess the question here is, taking the money that you make and putting it back into the business seems like a hard thing to do for a lot of us.
Yeah. I think that's something really important to do, especially at first, is to put the money back into the business. What I see for coaches, especially, is that they want to get more education. So they want to get another certification. They want to do another, thing like that. And so that's what I see them spending a lot of money on rather than things, at least in my industry and in the coaches that I work with and the solopreneurs that I work with, because they think that will make them more marketable. And sometimes it will, but I like to advise them to get their core offers down and up and running and making money before they move on and invest money in something like another course. And so that's what I predominantly see them spending. So it may be in the long term reinvesting in your business, but in the short term, it's not, because you have to kind of get the current offers up and running before you move on and chase something else. So it's like that shiny object syndrome, I guess. Right? Like, this is what I thought my business would be like. Oh, wait, now I want to add this thing. Oh, wait, now I want to add this thing. And I think you have to kind of pace yourself with things like that, because it could get financially out of control. And it also takes your focus away, right? It's hard to focus on what you're doing and to grow your revenue when you're chasing all the things. So I don't know if that answered your question, but I see more of that than the buying of, things, I guess.
Yeah. Well, I guess, going back to the first point, we wouldn't really know that if we're not aware of, the spending and the revenue situation to begin with.
Yeah.
And I think, a lot of people in that initial stage, I'm talking a lot about initial stages here, and I understand that, but I just think that's I think that's one of the biggest, like, I don't want to say problems, but that's probably where a lot of these problems stem from. Like, I can imagine a person, having a successful, maybe it happens, I don't know, but I can imagine somebody being successful in 15 years into a thing, and then all of a sudden, their finances take a turn. Maybe it could, I don't know, maybe, but I think just it's important to make the right steps from the beginning, and that's
Yes.
kind of what I'm trying to get at here.
Yes, to build the foundation. And that's a lot of what I teach. And it's also why I work with beginner solopreneurs, or why I love to do that, is because getting your systems in place, you have other systems in your business. Your finances your financial management should also be a system that you have, right? So that way you get your ducks in a row and you get everything situated before you have so much volume or so much going on that then you're like, oh, I don't know what to do with this. So if you start when you're making a little bit of money, you don't have a ton of expenses, get those processes and, like I said, systems in place. Then as you grow, you have that framework. And so also too, as you grow, your needs will change. So the solopreneurs that I work with, like I said, before, I built this course, which includes templates to help them get situated. But as they grow, they might decide investing in a bookkeeper is what they need to do, or, outsourcing, or investing in some more complex accounting system, something like that. And that's all great, but businesses evolve. So getting your ducks in a row and then kind of, you know, changing as you need to, I think is important too. But once you have those initial systems in place, then you kind of know where to go from there.
Okay. Yeah, that makes sense. I had a guy one time, I was talking to him, and he was saying that like we tend to like, especially when we start a new thing, we're kind of focused everywhere, like all over the place. But if we were to zero in on, if you have a coaching business or whatever, if you were to like zero in on just a couple things versus trying to have like a whole, a whole
Yes.
category of things that you do. I mean, maybe like finding a niche, basically, maybe will help you. Cause I know in my personal experience, finding that, area where we really seem to do the best at and kind of focusing in on that is really something that helped us. But, I guess when you're trying to start out, like I said, you're just trying to make the waves and make the moves and do the right things. And so it's easy to kind of focus on everything. But when you focus in on those specific things, man, it really makes a difference.
Yeah, I have a mentor who says, do less better. And I always try
like
to keep that at the forefront of my mind, right? Do less better and then add on as time goes on. It makes a lot of sense to me.
For sure.
Yeah.
Sarah, let me stop this video really quick. I meant to explain this to you before we started. Let me stop this really quick and we'll pick right back up.
Okay.
Okay, so I wanted to ask you about your bio, I think it was, said about pricing. Like pricing, you help entrepreneurs and solopreneurs price their services or the product or whatever. What is, like, how does that, I guess maybe if you're open to talk about that here, if not,
Sure.
we don't have to. But I was curious about that because it said you help price. I'm just curious, like, what is the system for that? Because like for me, like a brick and mortar type business, it's probably a little bit different. And so I'm just curious, like, how you guys do that.
Yeah, I think it depends on a lot on your industry too, right? And so I like to recommend several factors. Number one is, how much time it's going to take you to do that offer. So whatever it happens to be. So if it's a group program, say, and, you're going to spend hours uploading videos and things like that, you want to take that into consideration. I think it's also good to take into consideration what others in the industry are doing. And so, look around, see what others that are offering something similar to you that have a background similar to yours are pricing their similar services at, right? So that's another thing I like to do, like a market comparison and just kind of get an idea there. And then, a lot of it also too has to do with the number you feel comfortable with. And I know that sounds like a little unscientific, I guess, but if there's a lot of coaches out there that will say, oh, price, really high, whatever. But if you're not comfortable with the price that you're putting out there, it's going to be very hard to attract clients that are willing to pay that amount, right?
Right.
So you want to feel comfortable talking about it. You want to feel comfortable about putting it out there. And so one of the things I recommend too is you could start at something smaller or something lower, and then increase your price over time. So for example, when I first offered my program, it wasn't the same as it was now. Of course, like I mentioned before, I put a lot more bells and whistles. It's a lot more robust than it was initially, but I offered it as something that I felt really comfortable with. And then as I saw the value of it over time, I incrementally increased it to a point now where I feel that I'm very comfortable with the value that I'm giving with what I'm charging. And so I think it can be, especially for new solopreneurs who are not used to creating prices and putting themselves out there in that way, it can be smart to start smaller and like build up over time. So I don't think there's a scientific way to do it in the coaching space, but I think you have to go by what others are doing, the value you're offering, and then also how you feel about charging the amount that you're charging.
Yeah.
Yeah. So that's how I recommend it.
It's really hard to reinvent the wheel on anything, and I think that's a that's exactly what I had in mind, to be honest with you, was just kind of compare to what the market's going on. And that's the way I would have done it, but I think that is important, to see, just because that's what the price is for the market, you have to make sure you can match that value. You can't just,
Right.
you just match the price and just offer something that's 25% of the value, So
Absolutely.
I love the way you put that. I think that's really smart to do it that way. And like I said, there's just there might be so much I'm speaking for, so I don't know if you know this or not. I own a landscaping company. So
Okay.
so for me, there's a lot of time and expense and that kind of thing. So
Mm-hmm.
it's a little bit different from the coaching, the online coaching thing, but I'm just speaking from my experience in that there's a lot of things, especially in the first 4 or 5 years, that you don't really anticipate, you don't know,
Yes.
and you can call around and check prices. This is for any trades pretty much. But again, if you can't offer the value those guys are offering, that's the first thing. And the second thing is, I mean, it might seem like it's an unreasonable price, but first of all, everybody is pricing it at that or something around that, and there's a reason for that, because there's expenses that you just don't know that even exist when you first start out.
Right.
This is well, I was gonna make a tax joke. Really, I was gonna make a tax, but I don't know if I want to go down that road. I'll just say this: I had a person who was in a similar interest, and he was like, "Man, I'm gonna have to pay like X number of taxes on this job that I get, so I'm gonna have to figure that into the price." I'm like, I don't know if it necessarily works that way. I don't think you can increase your price, but anyway,
Right.
whatever. Dude, I think taxes, I think that's a whole nother subject that people, like, you talk about people, like the lack of education, lack of awareness. I think taxes, like, I do not know why the education system, I'm talking about the education system in America, does not teach us taxes.
Yes.
Like, there's like a lack of, first of all, there's a lack of financial education, but then like, we
Yes.
don't know anything about taxes, man. And we get out and we're like young adults and, 19, 20, 21 years old. And we're starting to get our first tax refund or whatever it is, or we either have to pay there's just such a, I hate to say an ignorance, but it is kind of an ignorance around taxes,
Yeah, I agree with you. I think we don't learn that in America in school. And unless your parents taught you, you really don't know. And especially if you're working for yourself, like if you go and you work for an employer, you have to, file all the papers with, the personnel department and all of that. And right. And they kind of tell you what to deduct. But if you're working for yourself and you don't realize that you're going to have to pay a certain amount of what you're earning to taxes, and you don't put that aside, that can be a big problem, because you wind up at the end of the year, you file your taxes, and then you're like, wait, I have to pay. So that's actually something I see, that people don't realize that they're going to wind up having to pay tax on that income. So they have to put it aside. Not like having an employer who deducts it for you, and then
Right.
you don't really have to worry about it so much. Another thing that comes up too is, estimated taxes. So if your business is doing well and you start really making income, you're going to want to be paying estimated tax, which is basically you pay quarterly. And then at the end of the year, you kind of true it up and you pay the difference. And so that helps to spread it out over time, so you're not stuck with a big bill at the end. So that's definitely something to keep in mind. And then also deductions for your business. So, no one's teaching you about filing taxes, but no one's teaching you about the actual expenses that you can deduct from the revenue that you're earning that are legit, that will help you keep that tax burden lower. And so I think it's important when you're starting your business to educate yourself in, you don't have to know the tax law front and back, obviously, but you need to know the basics so that you can make sure that you're tracking what you need to know, and you're putting aside money you need to put aside, so that when it comes to tax time, you're prepared and you're not scrambling. And like you said, you don't know what you don't know necessarily. So sometimes it might take a year or two to get yourself situated, but definitely make it a priority to learn what you need to know, because we don't learn it. We don't learn financial management. We don't learn tax, preparation. We don't really learn anything that's practical in the realm of financial management, I think.
Well, just the education system is one thing, but then, money, I've said this before, it's like money is like such a fragile topic. I feel like, for most families, my family didn't have conversations about money. Like, money's not something that's talked about, and I just feel like, if the school, if public education is not going to do it, and the household's not going to do it, then how do we learn it? I mean,
Right. Right. It's like trial by fire. Like, whoop, there, you're in the real world. Now you have to learn it. But it was the same for me. My parents did not talk about money. They didn't teach us how to manage money. And I went to school for accounting, but accounting and like your personal financial management are not necessarily the same. You learn debits and
right.
credits and all of that, but it doesn't always translate. And so when I first lived on my own, when I was in my 20s, it was like kind of a big wake up call because
Hmm.
I didn't know how to manage it. And I figured it out over time by really getting the education I needed and learning what I needed to know. And then by the time I started, I left the employer I was working for and I started my health coaching business. Then fortunately I knew all the things that I needed to keep track of and how I needed to manage it. But it was a lot of trial and error for a lot of years doing
Right.
that. And so I think it's one of the reasons why I also do what I do is so that I can help others learn what they need to know, what they need to keep track of. And in my own house, myself and my husband, we make it a priority to talk to our kids. I have two teenagers, 12 and 14. And so we talk to them a lot about money, financial management, and obviously in terms that they can understand. But
Right.
as they get older, we can talk a little bit more plainly about it. And it's my mission to have them educated and equipped so that when they go out into the real world, they can make those decisions for themselves and they won't have to struggle the way that I did in figuring it all out.
Yeah.
Yeah.
Well, and another thing too about that, if we don't have the conversation, if the conversation is not had within the family, I think that implies that, the money or financial education is something to fear. It's like
Yeah.
there's an anxiety around it. I mean, you
Mm-hmm.
should be, I guess, maybe worried to a certain degree about it, but not talking about it makes it seem like it's the monster under the bed type thing. I mean,
Yeah.
and then when we get out in the real world, you mentioned trial and error. Fortunately, that's how a lot of us learn about finances, and that lesson usually comes with like a mountain of debt, or
Yep.
a maxed out credit card, or a
Yep.
bankruptcy, or whatever.
Mm-hmm.
And I just feel like, man, if we can get on the front end of that, if we can get, be proactive instead of reactive.
Exactly. I agree with you 100%.
But then you have things like inflation and all this other stuff that you can't really, who knows what the answer to that is. I mean, it's funny. It's not funny. It's actually kind of sad. I saw something, on social media. There was the movie Home Alone, when he
Mm-hmm.
goes to the grocery store or whatever,
Mm-hmm.
and his bill was like $19 or something. And there were some people online who did an analysis of that. The same thing that he bought then in that movie would be like $70 now.
I saw the same thing,
And it's
actually.
like, I
Yeah.
was like, oh my gosh, man, I did not realize that. Well, Home Alone was what, like late 90s, early
Yeah. I think
2000s, probably.
I think it was in the 90s.
Yeah. So,
Yeah.
like 20 years. And I mean, that is crazy, man.
I know.
That's over three
It's,
times the price.
yeah, exactly. It's very different now. And also too, I think, you know, many of us and myself included when I was younger just aren't aware of what things cost either,
Mm.
right? Like you go out, like you mentioned, you might have a credit card where you go and buy something that you really can't afford, but you don't think about it because you just put it on your credit card. I know I definitely did that in my early life where I was not thinking through the actual cost of things. And so I think that's one thing that's important for us to teach others is that it's the awareness, right? The topic shouldn't be taboo. What you want to do is build awareness of how your choices will affect you in the short term and in the long term. And I am definitely not one for, you know, putting all the money in savings and not enjoying your life, but you have to just think about the choices that you're making, you know, in that point in time. Are they worth it now, or is it worth putting it off till later? And I think it's important to, talk about it, think about it, and not have it be like a taboo thing to discuss.
Yeah, I agree. So with that being said, you mentioned credit cards. What's your opinion on like debt? And I know that's a very loaded question,
Yeah.
but like, because I mean,
Yeah,
there's good debt, there's bad debt.
agreed. I think it really, really depends on your situation. Like if I'm going to speak about business, for example,
Hmm.
if you're a coach and you're starting out, I don't really think it's necessary initially for you to get a credit card because you don't really need it. There's not a lot of overhead in this type of business. However, if you have a business where you need to buy, it makes sense to buy things in bulk because you get a discount or whatever it happens to be, then maybe it does make sense for you to get a business credit card or a line of credit or a loan. But you have to make sure you have a plan for paying it back.
Right.
So I think from a business perspective, that's really important. And from a personal perspective, again, I think it depends on your situation. I have a mortgage on my house. Obviously that to me that I couldn't have bought a house in cash, so
Right.
that to me, that makes sense to have that kind of debt, and there are other kinds of debts that it may make sense to enter into. But I think it's, again, having the awareness, right? Like when I went to college, I had no idea what kind of debt I was getting myself into. If someone had educated me at that time, maybe I would have chosen a different college. I don't know, so I didn't have that awareness, and neither did my parents. And so I spent years and years paying off my college debt. So I think it's the awareness is really, how you can then make an educated decision as to what's right for you and for your business and for your life.
Right. Yeah, no, I agree. I think the trick there is distinguishing like what kind of debt we need, for our business and what we just kind of, would like to use as a need. It's a very dude, debt can be one of those things. I think what it comes down to is like delayed gratification. You need something right now type thing. And again, social media is a big part of this because it's glamorized the $500 purse and not the $50 purse. And so yeah, that's a whole. I think you could probably speak for like 2 hours on debt and like what the issues with debt are. But I think if you can use it in a productive way, if it's something that you actually need, like a mortgage or something like that, that's completely different from like going out and maxing out a credit card at a shopping mall. So let me ask you about savings, because I assume this kind of ties in with money management. And I'm not trying to back you into a corner here, but we were talking about like inflation and things like that. I would just imagine somebody says, well, it doesn't seem like saving money now is the same as saving money in 1950 or whatever.
Yeah.
So like, how can we? Is there even a way we can kind of get past that, like this whole inflation thing? And
I mean, I'm definitely not an expert in that area, but what I can say is that I think it's important to prioritize some sort of savings, even if it's not as much as you might have been able to do in the past. And what I recommend is when you're earning revenue as a business owner, from like a sorting it all kind of tracking perspective, is to take a percentage and put it towards savings, a percentage and put it towards taxes. And now the tax rate you can estimate pretty easily based on if you're filing as a sole proprietor with your personal tax return, it'll be like roughly what your personal tax rate is. So you can estimate that and put that aside. Put aside an amount for saving, put aside an amount to pay yourself, and then put aside an amount for your operating expenses, right? And you might have to tweak those percentages over time, but maybe you start really small with the savings percentage, and as you grow, see if you can kind of, change them and do what makes sense. But I recommend getting into the habit of doing it, even if it's just a small amount, because then over time, you won't miss it as much when it's coming out, and you'll start to see it build. So does that answer your question?
Yeah. That makes a lot of sense.
Yeah. I think to prioritize it, even if it doesn't feel like it's a lot of money, because over time it will add up.
Yeah. Cause I hear like, coaches and people that I don't know, seem to be pretty successful. A lot of people say that you should like try to live off 30% of your income. And some people say, you should try to have, 3 to 6 months of income saved up, which I know is a lot for a lot of people. And so yeah, I think for sure having some sort of, whether you want to call it a cushion or whatever, can't be it can't be a bad idea.
No, exactly. And that's a good goal, 3 to 6 months of expenses. I mean, again, it's sometimes difficult to get there, but I think that's a good goal to have. And to, like I said, put a little bit aside so you're not really noticing it. But there's a really good book. It's called Profit First. I don't know if you've ever come across it.
I haven't.
But it basically explains in detail what I was just talking about before, kind of separating out the revenue that you earn and prioritizing the profit first before these expenses. And it kind of helps you to see that not to lead by expenses, right? So not to be like, oh, I'm earning this money so I can cover all these bills. It's kind of shifting your perspective. And so I love to recommend that too, because it's a good read just to kind of get you in the mind frame of thinking that way as you earn money in your business.
What did I'll put it in the description. What did you say that book was?
Yeah, it's called Profit First. And the author is Mike Michalowicz, I think is his last name. And it's just a good overview of kind of that framework of tracking, your money and slicing up your money in your business.
Okay. Something else too, and I don't know if we have enough time to get into this today or not, but something else too I've noticed is like a lot of people, I don't know if this is considered a way to save. I mean, probably not, but it is definitely a way to use the excess money that you have. But you'll see a lot of people, example, Elon Musk, take the money that they're making and they'll try to use it for something else. So instead of maybe, and I don't recommend anybody do this because this is a very risky thing, but instead of like saving however much you want to save, whatever percentage or whatever, they take maybe a percentage of that, maybe all of it, and put it back into something else, whether it's another business, another investment. You see people do this a lot with real estate. Like a person has a XYZ business and then all of a sudden they're in the real estate. And I guess because I don't really think the term passive income exists. I mean, I don't think any income is, because you got to maintain it. You have to check on it. Something has to be done about it.
Yes.
But I think the idea there is that these people try to make a passive income type thing.
Right.
And
I think it's a lot of it's risk tolerance. And like, what is your risk tolerance? Do you prefer to have the money saved in the bank so that that you have it there? And once you accumulate, your emergency fund or whatever, you could then start investing it and then it will grow. But if you're the type of person who likes to take risks and likes to explore other business options, that might be the way to go. So I think it depends on your own personal risk tolerance, how you want to approach that.
Yeah, for sure. I think just the problem with that is most entrepreneurs are risky people, like we said.
Yeah, right.
I mean, because by definition, I think, what is it, like 80% of businesses like fail within the first few years or whatever it is.
Yeah.
I mean, it's just a risky thing to begin with.
Yes.
And so, Sarah, I want to make sure you have time for this. Do you want to promote your website or your business or anything?
Yeah, sure. Business? I'd love to. So I mentioned a little bit about my program. It's called Easy Business Bookkeeping, and it's basically a program I put together to help beginner solopreneurs, coaches, wellness practitioners, the people that I was talking about before, learn what they need to know to manage their finances easily. And so that's, a very simple spreadsheet-based program with tutorials from me. And we also have monthly money dates where we meet, on Zoom and go through and dedicate time to put aside for finances. Cause that's an important thing too, is actually making the time to implement what you need to do. And so you can find out more about that at my website, sarafins.com/self-paced. And you can learn all about that program, but you can find me on social media also under Sara Fins or Easy Business Bookkeeping. So you can learn about me and my offers there. Mm-hmm.
Okay. And so I just want to make sure that I understand you work with, like people with personal finances and business finances?
Predominantly business.
Okay.
Yep. Predominantly business. I mean, it's intertwined, but my focus is to help solopreneurs manage the money of their business. And get that in order so that when they file their taxes and they can use that information, and also so that they have, like we were talking about today, the information they need to make smart business decisions and grow their business to make it sustainable so that they could, they could do more good in the world and keep doing what they're doing.
Yeah. So I think Tony Robbins has a quote that says the direction of a business is 80% psychology and 20% mechanics. So if I don't know if this is a good assumption to make or not, but do you see a connection with like people's personal finance and business finance?
Yes.
that does
Yes.
kind of, I guess maybe that sounds obvious, but I don't know if like people, maybe take one more seriously than the other, or if they just like unconsciously affect both.
Yeah, well, it's like that quote, right? How you do one thing is how you do everything.
Right.
So
Yeah.
typically, if people are not so organized in their personal finances, they may not be so organized in their business finances. Or if someone's starting their business kind of as a side hustle, they might
Mm,
not think the management is super important, but they might be managing their personal finances well. So, it's definitely intertwined. But often what I see too is if a client will work with me to get their business finances organized and streamlined, it motivates them to do more of that in their personal finances too. And so it definitely overlaps and it kind of feeds into each other. But
yeah,
yeah.
that makes sense.
Hmm.
That makes sense. I just didn't know if maybe one person took one, more seriously than the other, but it kind of does make sense because if especially if it's a sole operator,
Exactly.
just kind of one person involved. Uh, and then the best way I've known how to say this, Krista McMillan said this. A recent guest, she said, it's like they're robbing Peter to pay Paul. Sometimes,
Hmm.
one way or the other, whether it's business to personal, personal to business, whatever. Um, and so I think that's a good way to. I mean, it makes sense.
Yes.
Um, if you had to, if you had to say like one of the most important lessons you've learned, and like just it can be a financial lesson through business or something through coaching, the health and wellness part of it, just something that you're comfortable sharing. What do you think is one of the most important or most valuable lessons you've ever learned, just kind of over the course of your career?
Yeah, I think that would have to be to not be afraid to let something go in order to embark on something new. So an example is before I was doing this work, I was health coaching and I ran my health coaching business for about 10 years. And I had the idea to help coaches with their finances, but like I said, I was testing it out at first. I wanted to see what, how it would work, but I was feeling really passionate about moving into this space and doing this kind of work, but I was afraid to let the health coaching business go because I
Mm,
had been doing it for so long. I was comfortable and I had to kind of take the leap to let that go in order to move into the business I'm doing now. And I wouldn't have been able to focus on it because there wouldn't have been enough time for both. And so in order to make this business successful, I had to kind of let the other one go. And so that's one of the biggest lessons I learned, I think, is that you need to be willing to let it go. And I probably could have done it sooner. It
yeah,
might have launched me a little sooner, a few years down the line, hindsight's 2020, right? But yeah, that's what I would say for that.
that's amazing, man.
Yeah.
It's like I always tell people, like you don't have these desires or these goals. Like they're not an accident. You know,
Hmm.
I mean, it might seem like it's a completely opposite direction, but like these things, this intuition just doesn't come out of nowhere, you
Yes, I
know.
agree.
And a lot of times, like it's very difficult to, or even maybe scary to take that first step,
Hmm.
to break out of, especially if you got something that works and it took a while to build it and you're comfortable there or whatever. But taking that step in the other direction, man, what do they say that ships are safe at the harbor, but that's not what they're made for, you
Yes,
know. And just
exactly.
sometimes just taking that step in another direction, it can be the biggest or the best choice or decision you've ever made.
Hmm.
But I, man, I could talk all day about the comfort zone and the way it's not good for us, and breaking out of the comfort zone. I think everything that good happens to us happens outside of the comfort zone.
Yes,
You know,
agreed.
just on the other edge, like because if you can't grow comfortable. You can't grow
Hmm.
when you're in the comfort zone.
Hmm.
Um, so I love the way you said that. I appreciate you sharing that. Uh, is there anything that we didn't touch on that maybe you wanted to? Anything at all?
No, I think we covered a lot. I mean, this has been a really great conversation, but what I would just say to anyone that's listening that's starting up a business or that's in their beginning of their business is to just make the time to learn what you need to know and get yourself organized, whether it's finances or otherwise, then it'll really help you out in the long run in making your business sustainable. So yeah,
Well, I definitely appreciate it, man. I appreciate your wisdom and appreciate your insight. Um, and
appreciate you having me.
Yeah, I do appreciate it because what you're doing, this financial education, like I said, this is that, and like and health and fitness education is so important because like we're never taught those things.
Hmm.
I mean, most of us aren't, at least not in a public education setting. And so something like what you're doing, just trying to, and even like with starting the businesses, whether it's coaching or something brick and mortar, if you help people with that kind of thing, I mean, whatever it is, I think that this kind of education is really, it's crazy that this is education, but it's like, it's this whatever you want to call this, I don't know, there's like holistic medicine and whatever kind of education this is. It's like we have to seek this on our own.
Yes.
And I understand this may not be for everybody, but at the same time, I think everybody needs to be aware of this kind of thing. I think I think finances would be probably in the top 3 of most people's list of, issues or whatever in their life. I mean, I think if people had and not necessarily having more money, I'm just saying the money they do have that figured out.
Exactly. Yep.
I think would help out a lot. And I don't know. I don't know, man, the education system, I really got to get somebody on here like in education to talk, like, cause I just don't know. Like there's so many things I feel like, I don't want to say irrelevant, but I mean, they kind of are irrelevant. You know what I mean?
Yeah.
Like,
yeah.
Anyway, that's a whole nother rabbit hole. We don't have time for that today. I'm going to stop this video really quick and let me explain to you about the upload process and everything. But
okay.
Man, I appreciate your time. I appreciate you doing this with me. And,
yeah. Happy to do it. Thank you.
Thank you.